A very good morning and a happy Thursday. Happy Thanksgiving for those celebrating. Welcome to today's episode of Morning Wealth. We'll talk about three things: market pause before Thanksgiving, personal spending numbers, and UK economy to plunge 11.3% this year. The Dow retreated on Wednesday, a day after it surpassed the 30,000 mark in what seems to be a reality check as investors settle in for a lonely holiday season. Jobless claims rose for the second consecutive week, according to Labor Department, while household income fell 0.7% in October from a month earlier in the absence of further government stimulus. And while consumer spending rose in October for the sixth consecutive month, gains were the smallest over that period. Gap Inc. warned in its third quarter report on Tuesday that rising virus cases would mean fewer store visits over what is typically its strongest selling season. The update sent its shares down on nearly 20% as Wednesday's close. Meanwhile, the deal market continues to be hot. The Wall Street Journal, in fact, reported on Wednesday that technology giant Salesforce.com is in talks to buy Slack Technologies, noting a deal would likely value the online messaging company at over 17 billion, making it Salesforce's largest acquisition ever. Shares of Slack soared more than 37% on Wednesday, while shares of Salesforce closed down over 5%. The Dow Jones Industrial Average fell about 173 points, while the S&P fell 0.2 and the Nasdaq actually gained 0.5%. The 10-year yields hovered around 0.88. The dollar declined against every G10 peer. Oil jumped about 2%, while gold edged slightly lower. Asian equity futures are narrowly mixed. In other markets, the Euro Stoxx 600 was down 0.1%, led by automakers and energy companies. Asian benchmarks are mixed, while the Japanese Nikkei 225 ended the day higher, 0.5%. China's Shanghai Composite fell 1.2%. Commerce Department figures released Wednesday showed that personal spending rose 0.5% in October and September. Even so, October's spending level remained 1.6% below where it was in February before the crisis struck. Digging a little deeper, spending on durable goods, that is long-lasting items including cars and even video game consoles, was up a good 15.2% from February, while spending on non-durable items was up about 4% driven by food purchases. Spending on services, the much larger component of spending, which includes everything from restaurant meals to dentist visits to spa visits as well, was down 5.8%. The UK economy is collapsing the most since the Great Frost of 1709, Chancellor Rishi Sunak told lawmakers. GDP will plunge 11.3% this year, and the unemployment will peak at 7.5% in the second quarter of 2021. He froze wages for non-health public sector workers and lopped a chunk of the overseas aid budget. The budget deficit will be about £394 billion this fiscal year. Lastly, some Fed news. While some Fed watchers might be focused on the new Powell-Yellen axis, there is still a matter of the minutes for this month's FOMC. The central bankers discussed providing more guidance on their asset purchases fairly soon, and most officials suggested tapering the program before increasing rates, something that's unlikely until the end of 2023. However, there is no indication that there will be any modifications to the bond buying at their December meeting. The ECB minutes are up next and will be scrutinized for clues on what form the next round of monetary stimulus will take, which is expected to be announced in December. That's the update. Stay safe and healthy. I think some outage with the AWS service, which has affected my the usual channel that I record on. So I'm doing this on an alternate basis. I hope it sounds okay. I'm going to take a break tomorrow. I'll talk to you on Monday. Have a lovely couple of days and a restful weekend ahead, and we'll connect soon. Thank you so much.